In this video, we are going to talk about the reason why Elon Musk is selling Tesla stock. So, before starting this video, please like it and subscribe to our channel for future updates. Welcome to TechSpot. Elon Musk is cashing in on his success. Tesla CEO Elon Musk, who made headlines this weekend by polling his 61 million Twitter followers on whether he should sell a portion of his company's ownership in the electric automaker, has sold over $5.7 billion worth of his company's stock in the last few days. According to filings with the Securities and Exchange Commissions of the United States, Musk sold around 5.1 million Tesla shares in a combination of planned and unplanned transactions. Here's why Musk did it and what it implies for the world's richest person and his firm as a result of his decision. Musk was awarded Tesla stock options in 2012, which enabled him to purchase 22.8 million shares of the company at a price of $6.24 per share. Those options will expire at the end of next year, providing Musk a short window of opportunity to exercise them. Tesla's stock is currently trading at $1.47 per share as of Friday morning, making Musk's decision to exercise those options is a fantastic deal. However, if he chooses to do so, he'll be required to pay taxes on the difference between the stock values in 2012 and 2021 at a rate of more than 50%. According to CNBC's Robert Frank's calculations, this will result in a tax bill of almost $15 billion for him. So in order to settle the tax bill, Musk will have to generate some money. He's accomplished this through the sale of stock. The rationale for the transaction, according to the SEC filing outlining Monday's sale of more than 930,000 shares, was exclusively to fulfill Musk's tax withholding requirements connected to the exercise of stock options, according to the filing. Musk also sold 3.5 million shares on Wednesday for a total market value of approximately $3.9 billion. That was an unexpected transaction, and it's possible that it had more to do with Musk's Twitter poll than anything else. The sale was disclosed in SEC filings on Wednesday, but no justification was given for it. On Thursday, he sold an additional 639,737 shares worth $687 million, bringing his total sales to $639,737. In total, Musk sold around 5.1 million shares this week, accounting for more than 3% of his total holding in the company. His approximate 167 million remaining shares give him a controlling interest in the corporation of approximately 20%. However, the majority of sales last week were made for a completely other reason. As an alternative to selling as part of an options exercise, Musk began selling from his existing stock portfolio. Chartered accountants have stated that it would be impractical for Musk to utilize his existing shares to pay the tax on his options, because they carry a significantly larger tax burden. Because Musk's options are considered compensation, they're subject to ordinary income taxation. The aggregate rate for the federal government in California could reach as high as 54%. He would have to pay greater taxes because the strike price on the options is $6.24 per share, and Tesla's stock price on Monday was more than $1.160 per share, resulting in a tax liability of more than $10 billion on his gain of more than $20 billion. As a cashless exercise, CEOs typically sell the shares they have exercised shortly after they purchase them in order to pay the applicable taxes. There is no further capital gains tax due on the shares sold because they're sold immediately after being purchased. Because Musk's stock sales began on November the 9th and were pure stock sales with little or no cost basis, he might owe up to $1.3 billion in long-term capital gain taxes, according to the IRS. Paying taxes on both the capital gains and the options would be equivalent to paying taxes twice, once on the capital gains and another on the options. In the opinion of Toby Johnson, partner in charge of the Silicon Valley office of Moss Adams, an accounting, consulting, and wealth management business, it wouldn't make sense from a tax viewpoint for him to use those earnings for the options tax. Musk has confirmed that selling normal shares is less tax efficient than selling option shares, something he's previously stated. According to his tweet on Sunday, a diligent observer would see that my low basis share sale rate greatly exceeds my 10 billion high basis option exercise rate, indicating that I'm closer to tax maximization than minimization. So given the comparatively high tax burden associated with the non-option shares, why is Musk selling it? Tax experts and Tesla analysts predict that Musk will exercise the options before the end of the year, despite the fact that doing so would leave billions of dollars on the table, as well as an additional ownership in the firm, even after paying the taxes. That implies he still has billions of dollars in stock to exercise and billions of dollars in stock to sell in order to pay the taxes. The $5.7 billion in cash, as well as any more non-option shares he sells, will be used to pay down his debt. While he will owe federal capital gains taxes on the sales, he will most likely not be required to pay state capital gains taxes on the earnings because he's now a tax resident of Texas. However, because his options taxes are considered employee benefits and were earned while he was in California, the same law does not apply to them. A team of accountants has determined that the sales are unlikely to be for charitable purposes because he would have simply gifted appreciated stock rather than selling and paying capital gains tax first. In the case of SpaceX, his privately held space corporation, or another private venture, he might use the earnings to further his interests. Alternatively, he may simply wish to remove money from the table after years of being stock-rich but cash-poor and borrowing against the value of his shares to pay for his lifestyle. Federal taxes are also expected to rise in the coming year, providing an additional incentive for him to take a cash out if he was already considering it. Whatever the reasons, Musk will almost certainly end up selling significantly more than the $10 billion to $15 billion he needs to cover his tax obligations in the end. A poll on Twitter, which he conducted on November the 6th, asked his followers whether he should sell 10% of his shares. He stated he would follow the findings of the vote and that he would abide by the results. A total of 58% of those who participated in the poll agreed that he should sell 10% of his stock, which would result in a total sale of more than $20 billion in value. When it comes to people in his position, taxes aren't always the primary driver of investment decisions, Johnson said. In the meanwhile, it still appears as though there's a piece of the puzzle missing that we are not aware of. So what's the stock market's reaction to this news? Tesla shares were down more than 17% for the week as of Wednesday morning, but the stock has since recovered to a level of approximately 3.5%. The Wedbush analyst Dan Ives believes Musk's Twitter poll was a lightning rod event that caused investors to expect a cascade effect on Tesla's shares as a result of the announcement. According to Ives, reports of Musk's planned tax bill helped to reassure those investors. Ives says whether the Twitter vote results in a yes or no decision, he was going to have to sell the stock. With the passage of that tax bill, investors realized that a stock sale was imminent. Stocks in Tesla have maintained their excellent performance this calendar year. The stock has gained almost 45% year to year, and it recently became the sixth firm in history to surpass a market capitalization of $1 trillion. What is Elon Musk's current net worth? Despite the volatility, Musk is the richest person on the planet by a long way. In the most current available estimate from the Bloomberg Billionaires Index, his net worth totals $294 billion. Earlier in the year, it reached as high as $340 billion. Since the beginning of the year, Musk's net worth has increased by $124 billion, a huge increase that has been fueled in large by a steep increase in the value of Tesla's stock price this year. The world's second richest individual, Amazon's Jeff Bezos, is now valued at $200 billion. For the purpose of comparison, Bill Gates, the world's fourth richest individual, is worth $137 billion, according to Forbes magazine. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear more from me again, be sure to hit the subscribe button before you go. And thanks for watching.